Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, December 10th, 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. As always, quick rundown of the news. Japan's November consumer confidence came in lower at 37.7 versus 39.5. New all-time highs in the Bund as funds move to safety. This inflation theme remains intact. China's inflation is lower than expected and spurs speculation that the Bank of China has room to act by cutting rates. CPI registers its lowest reading since November 2009, while PPI fell for the 33rd straight month. And at its steepest pace in 18 months, November CPI year-on-year comes in at 1.4% versus 1.6%, and PPI comes in at negative 2.7% versus 2.4%. So strong disinflation theme there from China. France's October industrial production data misses expectations, and Greek equities continue to extend losses after yesterday's record decline. Greece is going to need another bailout. Greece formally requested bailout extension of 2 months, and then also this morning, OPEC cuts 2015 oil demand growth forecast by 70,000 barrels per day to 1.12 million barrels per day. November OPEC production 30 million barrels per day, negative 390,000 barrels per day month on month. So OPEC's interesting in that it's completely undisciplined. The members of it continuously violate the limits on how much production they should put out there. So this is important for those of you watching or trading crude oil, but not sure what their demand forecast is going to tell us that isn't already in prices. Looking ahead, half hour after the open, ECB's Kerr participates in a seminar in Brussels and expected to talk at 9 Central. At 9:30 Central, weekly DOE crude oil inventories. And then at 10:15, we have the Bank of Canada's Deputy Governor Wilkins expected to talk. At 11 o'clock today, noon Eastern, the USDA World Agriculture Supply and Demand Estimates crop report. For those of you who are watching grains, at noon, Treasury to sell 21 billion in 10-year notes reopening. At 1 o'clock, we have the U.S. November monthly budget statement expecting negative 79.5. Prior is negative 121.7. At 2 Central, the New Zealand Central Bank puts out its interest rate decision, and then the Reserve Bank of New Zealand's Governor Wheeler is expected to go into a press conference at that time. Expected to leave the official cash rate unchanged at 3.5%. And then later this evening at about 6:30 p.m. Central, Australia's November unemployment change is expected at plus 15,000 versus 24.1 thousand. Employment rate at 6.3%. Let's look at what the market has done. So what you're looking at here is my fundamentals chart. This is the SPX cash index. By the way, the premium now is as low as negative 0.3. As we approach expiration here, the cash is trading 0.3 points above the futures. You can see the pattern that we formed here. We broke through this long-term channel on the SPX. We broke through it, poked it, and came right back up and through the midline, and are holding the upper side. We're making new highs before the correction over the last couple of days. Yesterday leaves us with a hammer formation closing positive. right up against the prior day's low on the cash. But if you look at the 52-week low measure on a New York Stock Exchange, we have a nice little spike here on Monday as the market fell. We have a nice little spike with put-call ratios staying steady. Now, put-call ratios are tricky this time of year as we approach expiration. Quad witching next Friday. I believe it'll be the 19th. So it's tricky how they compute these premiums, but overall, the put-call ratio is outside of where it normally hangs out, just outside. It's in this darker blue area, which is a second standard deviation price, and the 52-week highs and lows are both moving down based on yesterday's action. There's a risk from yesterday's action that there would be a snapback drop, a dead cat bounce, as they call it, because of the way the structure is formed. What you're looking at here is essentially the same chart I always show, except it's in a 60-minute format. And what I've done is I've superimposed a microcomposite that goes through yesterday's trading action. It includes yesterday's volume, and then I have it plot dots. And what these dots allow me to do is, because they extend so far past prices, they allow me to see very clearly where the high volume nodes are since the beginning of this this composite. This composite started on the 31st of October when we gapped up. Here's the gap up on the 31st of October, and new highs. So what essentially this shows us is the market's trading in a crowded high volume area here, and then it broke through on Monday. It broke through on Monday and is sitting in this lower volume zone. It tested this LVN right here. You can see there's a divot in the volume at about 54.25. So the low 53.75. So missed it by 2 ticks, or through by 2 ticks. And then what happened is yesterday it opened in the next high volume node right here with the, you can see these red dots representing high volume. It opened right against this high volume area, initially pushed right into the highest volume price at 35.25 to the tick, and then pushed up, but then it fell off and pushed even deeper into this high volume price where it found support, and then came right out of it and back towards where we were on Monday. So we're in this lower volume area right now, in between two key areas. We tested one yesterday and rejected it, so the expectation is for it to come back up. As you can see here, the high volume price here, the point of control for this area, is 2067 even, this number I've been talking about for some time, and that's a magnet above. The overnight session, falling off again in Europe, not giving up too much, essentially just sitting sideways through the Asian session, and then with the European session you have a little more activity, and then it sold off here at 6:30, holding near lows. We have somewhat of a similar configuration as yesterday with much lower volume. This is yesterday's overnight session, just sitting sideways, selling off a little bit into the evening, into the Asian session, holding a little bit, and then selling off strong on Greece yesterday. Similar kind of pattern, but a lot tighter. 2051.50 is the low, and it looks like the low may be tested again. However, given the way we traded yesterday, and what I went over as far as context just now, the fact that we have this magnet area above, it's likely to sell off early, sell a little bit early into this lower volume node, Yesterday's the overnight low is up against the initial low volume node LVN right here at 51. You can see the low is at 51.50. Could sell off as far as 47 area, 46, 47 area before it finds support. But the expectation is that it'll climb back into this 67 area as you can see here, it clearly rejected the high volume prices below. Assuming buyers are still here and still interested, nothing has changed. We'll find that out as soon as we open. The current price is 52.75, so it's trading in range and in value for now, except that we were going to open in 19 minutes, 18 minutes, and that could change dramatically. But overall, it looks like it might test lower first. But overall, I think it's likely to push higher into the 67 area. Yesterday, we did come back and take a stab at the point of control from the prior day. So we have a lower high, lower low with a lower value area, lower point of control, showing us that the intermediate term trend is lower. But the market has come back and tested this point of control. Expected it to extend up to 63.50, just could not, ran out of time. And then the overnight high didn't even try. So there's a fair amount of weakness here. But again, I'm going off of the big piece here that we did test the lower high volume node and pushed higher. So today, we might end up with one of two things that hold the highest probability of happening. Initial sell, potentially a small sell in and through the overnight low, and then buyer comes in and brings it back up to where we were near the highs yesterday. Given day ranges, it's likely to push through to 63.25 or maybe even 67. That's well within range, just 15 points up. Otherwise, the other probability is that it does take out the low and we have an open auction in range and it trades both sides, and then eventually it sells off down to 47, 46, but it stays within yesterday's range to rest today. It'll be very hard to determine which one is likely to kick in this morning, but we just need to sit on our hands when the market opens and wait for it to tell us what it wants to do. Okay, so looking at yesterday's action, I did do a trader bite yesterday, but it was a recording, and it's on my YouTube channel if you want to see it. But in general, we didn't really it didn't really go anywhere. The expectation yesterday was for responsive buying initially, and then for it to sell off into the high volume node, which it did. I did not expect as big a rally going into the close, but here we are. The market does what it does. So you can see here it thoroughly tested this high volume node below from the prior days, which isn't shown on this chart. Thoroughly tests it, finally comes back to the IB high, coils up quite a bit here, putting in quite a bit of volume. Volume's pretty strong yesterday, and then it breaks through with strength. So a lot of this volume here, this high volume, dissipates into this rally. The expectation is initially we would see resistance at 53.75, the prior low. Not too much respect there. It pushes right through. There's a high volume node that's formed at that price, but overall the market aggressively gets into prior day's range and tests right into the point of control. This is not a coincidence that it pushes right into the point of control and then buyers let go. This is where prior value was established, and the buyers just stepped away once we got to that price. Beautiful price action in auction yesterday. So here we are looking at what we did if you look at the action, if you step back from the action and look back at what we did here, 3650 is the point of control of the last balance area, and that's basically what we tested yesterday. This whole area has a lot of volume in it, pretty evenly balanced volume, down into about 33 or so. And then yesterday we tested 33 and a quarter before we took a bounce. The range is pretty high for an up day, and that's why my expectation is for this to test lower but continue higher. Buyers did come out, and they came out pretty strong. Yesterday's range is 27.5 points versus the prior day's range at 22. Usually you see wider range and more volume on sell days. So again, today, just be patient on the open. There's nothing, there are no numbers or anything at the open, but be patient on the open and see who's in control first to decide what your bias is. Then identify your setups, and then take your setups in agreement with your bias. Always trading with a position of strength, meaning always trading with the stronger participant in the market. That's our job, as opposed to just looking at price patterns and just taking every pattern that's traded. In my opinion, it's better to determine who's in control, who's a stronger participant, who has more interest, and then take your price pattern entry or moving average entry or RSI or stochastic entry. It doesn't matter what it is. Take it from that direction so that you can filter out some of the losses, hopefully. I hope that helps you out. Don't forget tomorrow's rollover tomorrow morning at 8:30. So I'll be looking at March 2015 prices tomorrow. I know the volume will not have shifted into the March contract yet, but I roll with the exchange. You don't have to. You can just stick with the December contract, but generally my data feeds and so on switch over with the exchange at the open tomorrow. So that's what I'll be quoting tomorrow. Okay, good luck, and I'll catch you soon. If you have any questions, futurestrader71.com/contact, or go to the resources page and check out some of the old chat archives in there. Take care.